Now, most of you that have been spending time watching the video content here on the channel, you've seen me talk about the strategy using multi-chart confluence. It involves just a 3 simple step process, okay, to go about scalping the future markets. Okay, in particular, I trade the NASDAQ. Time to time, I'll trade the ES or even the gold. But you can use this same strategy to trade across multiple markets. Okay, that means you can trade commodities, financials, currencies, whatever is your choice of trading. You can go about, trading and making $1,000 a day. I'm going to show you a simple strategy. Now, when it comes to monetary amounts or dollar amounts, of course, you have to have the right size capital. You have to have or practice proper risk management, meaning knowing how much you're willing to leverage or risk in the market, as well as where you are looking to take profit at versus your stops. Okay, so I've talked about in a prior video about compounding and using the 4%, 3% rule, meaning setting your profit targets for a goal of accumulating 4% on your account each and every day and risking only 3% of that account size. If you can do that, you can simply grow your account on a daily basis. And I'm talking about taking a very small account and watching it grow over time. I'm going to show you this 3-step strategy. First and foremost, it involves getting the market direction correct. That's number 1, step 1. Step 2 is marking up your higher base chart, whatever that chart may consume of. If it's a range chart or a tick chart or a time-based chart, whatever it is that you use to trade, use the top-down step or top-down approach analysis by using a higher base chart to get the market sentiment or direction correct. Okay, form a bias in which way that you're looking to trade based upon market structure. All right, so that's number 2, and then that's what we want to do from there is mark up our higher base chart first and foremost. Number 3 is just moving down or scaling down to a lower base or lower time frame chart, and then kind of marking off or marking up our charts with a smaller base zone. So again, step 1, that is determining the direction of the market. All right, look at market structure for all those that are struggling with structure of the market and being able to understand, is it making higher highs and higher lows, or lows and lower highs, to determine which way to actually trade. I put together a nice video. It is for for anyone that wants to become an elite channel supporter. The link is down in the description portion of the video, to include tons of trade breakdowns where I'll walk you through the strategy step by step on trades that I've taken and posted over on our Discord community, as well as the video playlist. So anyone that's interested in becoming an elite channel supporter, it's only $6.99 a month. That's $7 a month. I know a lot of you probably spend more than that on the price of a cup of coffee or whatever it is that you spend on a daily basis, which probably could add up to $50, $60 a week. I'm talking about $6.99 a month, and this may help you out tremendously. Okay, so again, you get the breakdown when it comes to market structure, the trade breakdowns where I walk you through. I mean, there's tons of videos there in reference to trades that I've taken, and I'll walk you through step by step, let you know, the thought process involved behind the trades that I took, talking about stop loss placement, profit targets, what we're aiming for as far as once I'm into a trade, where I'm looking to get out of the trade, what it is I'm looking at, prior to getting to a trade. So that has helped people out tremendously. So anybody who's interested in that membership program, of course, it is through the YouTube membership program. The link is down right below the Discord link. The Discord link is free. The Elite Channel Supporter link is right below that in the description. Okay, so moving on, talking about the step 1. We want to get the market direction correct, of course. I'm going to show you both a demand and a supply setup real quick. All right, so if we're moving to the upside and we can see the market making higher highs and higher lows, this is a major high right here. I talk about if you're struggling with getting the market direction correct, basically, taking trades, which a lot of people would say are, or you may not maybe know, are minor structure breaks, meaning this is a leg, a high and a low. And then when the market starts moving higher, making higher highs and higher lows, and we start to break through, minor structure break areas or minor areas of structure back to the upside, this will be the most recent high that it made, the major high. This will be the major low. So when we break to the upside and we finally take out and break through a major area of structure, at that point, I tell people, those that are struggling with seeing market structure, then wait for the major structure to be taken out and be broken. Wait for a major high or major low to be taken out, and then look for the pullback. So this would be a minor structure break to the upside, pull back, another structure break to the upside, a pullback, and then from there we got another structure break above this area here. So a structure break above 781, a structure break above pretty much 674, and this structure break here. But let's identify and talk about this area right here, because this is a beautiful area of demand where the market broke structure to the upside after taking out multiple areas of structure back to the upside before it actually broke this area of minor structure right there at the top, like right here, here, and here, back to the upside before it took out this area right here. So it did that on the way up, pull back, key area of structure, meaning an area of demand. Now, I always talk about, what marks up the high or low probability zone, right? If you have an imbalance or a gap resting back at the zone, that's going to help signify that that's either a high probability or low probability zone. There is a gap attached on this candle here. This candle here where the market broke up. Okay, this is like a little zipper, but this was a little zipper that broke structure, above this area here. So this is a demand area. Aggressive buying to the upside, pulls back. Demand area where there's a small imbalance resting on the gap or imbalance on this candle right here, this bullish candle right here. When the market taps into that, okay, we go ahead and mark up, or prior to, when we see the market taking out structure right here, and we start to identify where it can pull back to, it can pull back here, but it can also pull back here. But people always ask that question, well, which one makes sense to trade? Which one would you trade off of? It's all dependent upon when the market gets back to whichever zone, which one it reacts at first, okay? Because it can react here, yes, of course, and then take off to the upside like it did, right? Or it could break through this area here and come down and test this zone lower, all right? So we never know which one they're going to stop at and react at is what I'm trying to say. We're just trading based on probability, all right? And of course, yes, this is a push to the upside, so this will be a leg back to the upside. So you can take a measurement using a fib tool and say, okay, I'm looking for trades to where we had a big push to the upside, aggressive buy-in, broke structure. Maybe I'm going to take a trade and focus around something at the 50% area or lower, maybe the 76.4 or lower. So if we did a fib right quick, I'm going to show you right quick before I move on. And I'm not trading fibs. I'm just saying based on a retracement back to a key area, like this would be the 61.8, 76.4, 50% area. Well, the market stopped before that area there. It came down to the 38.2. It reacted there. We never know. We have no magic ball to see or crystal ball to see where it's going to actually react. We are trading based on probability and when the market could actually react at once it gets to a zone. If it reacts here, I'm taking the trade, simply put. Now, I would prefer to see it come down here at the lower extremity of this leg here to look for an opportunity to go short. And as you can see, it pushed up and it came down here, but it never tapped into this area here. And that's fine. I'm going to take my trade if I get enough rejection, enough confluence to take the trade from this area here. So right now, simply speaking, step one of the process or scalping strategy here is simply going to be, it comes back, taps the first zone off the higher base chart that's already marked up, and then we're moving down to basically the last step of the process, which is moving to the lower base chart. So step one, identify which direction we need to trade. Breaking structure to the upside, I'm looking to do what? Go long. Step two, mark off a high probability zone on the higher base chart where there's a imbalance resting at that zone. Okay, aggressive buying to the upside, mark it off. Step three is then going to be moving down to the lower base chart and finding or an identified demand zone within the higher base zone here. So step two was to identify the higher base zone. Step three is to identify a lower base zone on the inside of the higher base zone off the higher base chart. Okay, so let me say that again correctly. On the higher base chart, after we get the breaker structure, we are looking for a pullback to a key area of demand. Once we have identified that, and it's a high probability zone where there's a gap or a imbalance attached to it, mark that area off. That's the step two. Okay, because step one is just figuring out which way you need to be trading. If we're breaking structure to the upside, then look for a key area of a demand zone. Step two, higher base zone markup. Step three, lower base zone markup, okay, off the 24 range chart. That's what I trade with. Or it could be whatever your lower base chart is going to be, your lower time frame chart is going to be. But you're identifying a key area of demand on the inside of the higher base zone. Okay, if that makes sense. So I'm going to show you right quick as we scale down. All right, so simply put, this is the zone right here, okay? So the larger that green box that we saw on the 120, I'm down on my 24 range, which is my lower base chart. Once the market taps that higher base zone, which is the larger box here, a larger rectangle, that is that zone that you saw marked up on the 120 range chart. Now, once it's done that, we need to identify a zone. Third part of the scalping strategy, all right, third step, is to identify a zone on the inside of this larger zone, okay? Now, it tapped into the larger zone here, it came into it. I'm looking to see where there is a imbalance with a gap or imbalance where there's a demand zone on the inside. There's one right here, all right? This was aggressive buying to the upside, okay, right here. There's a small area right here. Where does the imbalance resting at? The imbalance is going to be on the gap's going to be on that candle right there. I know it's hard to see because this is on a lower base chart. So let me try to blow it up for you. Right here, there's a gap on this candle right here. All right, and there's a zone where a gap or that imbalance is attached to right here, a demand zone. So again, we're redefining or defining a smaller zone on the inside of the larger zone. So on the lower base chart, find a smaller zone on the inside of your larger zone off your higher base chart. Okay, so now that we come back to that zone right there, okay, you see it? Again, the first time it touched, it didn't touch into a higher base. It didn't touch into touched the higher base zone, but it didn't touch into the a high probability 24 range zone. Okay, this is going to be it right here. Okay, so we can see it come down right here. We're just like a few ticks away, but it didn't tap it, right? It didn't tap until a little bit later, right here. So as long as we tap into both those boxes, the higher base zone and the lower base zone, then that's going to give us confluence. And that's when it comes to trading, we're looking for as much confluence as possible. If I got a high probability 120 range zone off of a higher base chart, okay, where there's a gap or imbalance attached to it, mark the zone up, okay? First means of confluence. Second means of confluence is going to be if I get that pullback into the larger base 120 range demand zone with the gap attached to it, and there is a smaller zone on the inside of the higher base zone, that larger base zone with a gap attached to it, I'm going to trade that zone because that gives me another level of confluence. Here, it taps the first higher base zone, lower base zone, both with imbalances and gaps attached to them. I'm going to trade that once I get the rejection. The rejection is looking for the break and close of the candle above the last down bearish candle. Now you can get an aggressive here at 493, okay, which I probably would. Notice that we're hitting, we already have 2 minutes of confluence right there. Or you can get in at more, on the conservative note, maybe 495 or maybe up here at 500, and then allow the market to go, what it's going to do. You have to be committed to the trade, okay? It's going to do that pullback stuff where it pushes up, pullback, push up, pullback. A lot of people have a hard time weathering that storm there, and you have to trade based on what works best for you. If you see a pullback to break even, then get out the trade if you're not comfortable with sitting in a trade. But you have to be committed to see if the trade is going to fall through. That's the purpose of the reason why you have a stop loss. And the next question is, where do you place a stop loss at, right? Well, once you tap into both zones, the higher base and the lower base zone, right here at 21,487, the back end of there where you get the rejection at or reaction at the market, put your stop back there and give yourself a few points breathing room because they love to go up and then pull back to test right back there, almost sometimes take the tick. So by doing that, you've got a little buffer there in which you can allow, if the market comes back, to stay in the trade. All right. If you close the trade out at break even and you say, I'm done, I don't want to lose anything, then that's fine. But you're going to have to allow the market to kind of, you got to give the market some time to breathe, some movement there. Okay. So if it pulls back at break even, and you get out and then it breaks back above, then maybe get it in for a second chance, maybe re-enter. But people ask me all the time, once you're into the trade and it moves into your favor, but then it comes back to break even, what do you do? Well, I'm either going to, if I'm in profit, I take, and then it starts to pull back. When that first candle closes back to the downside, maybe that second one, maybe I'll get back out. I'll get out at break even. But if I see and I have multiple means of confluence, and I know just based on experience what the market loves to do, push up, pull back. It has its ebbs and flows. I gotta stay committed to the trade and allow it to push to the upside. You have to have a means or state of conviction if you are wanting to stay in the trade to allow for it to do what it's going to do. Okay. Now, again, like I said, you can do this to anyone that has the capital and you can make $1,000 a day trading the NASDAQ futures or even the ES, because the tick size is higher for the ES than it is for the NASDAQ. The NASDAQ is $5 a tick. This is the full-on E-minis, and then the ES E-mini market is $12.50 a tick. But picture this: if you're going for, say, 25 points on the NASDAQ, and say, well, 25 points, how do you, is that possible to do? Yes, because the NASDAQ moves a lot. If you get into a nice setup like this right here, as you can see, look what it did. Let's say you got in here at 500. It goes all the way up to here to 580. 25 points, and I believe it kept going up from there. Oh, it dipped back some, but still, 25 points on a move like that is fairly easy to get. Or if you could, get 10 points, 12.5 points, 15 points on the first trade, then look to maybe get into a nice solid second trade to pick yourself up 25 points. If you got 25 points in the market, right, and that's 25, I'm just going to show you right quick the simple math, times 4, that's 100 ticks, right? 100 ticks. If you do that times $5 a tick, that's $500. If you're in the trade with 2 contracts, then that's simply your $1,000 on the day. That's trading the E-minis. You could do this trading the E-minis with 2 contracts on the day and pull this number right here, $1,000 a day. Now, I'm showing that for a reason, because people always ask, what's a good strategy to use to make $1,000 a day? I'm showing you how you can scalp by doing this to do so. But it all comes down to getting the direction of the market right and marking up. For me, multi-chart confluence, higher base zone, lower base zone, and waiting for the market to react at the zone at both zones. Okay, it reacted, as you can see here, the first time off the higher base zone, but then it came back to the actual zone, the smaller base zone, on the inside of the higher base zone, and it reacted there, rejected it, and pushed up to the upside. This is what I do each and every day, especially when I say beautiful setups where the market pulls back to a key area of demand or supply off of the higher base chart. To start with, I will mark it up, wait for it to come back, see if there's a zone on the inside, and trade accordingly. All right, so in reverse of, here's a supply setup. Supply is when the market has aggressive selling to the downside. We can see it making these higher highs and higher lows, and then it comes down, makes a low, lower high, breaking structure lower, as you can see. All right, so when we see things like that taking place and we have aggressive selling to the downside, there's a gap attached, again, an imbalance at this supply zone. Low, lower high, breaking structure lower. Okay, and then it comes back to this zone right here. Okay, so I'm going to show you. I'm going to move down to the lower base chart right quick, and I believe this is it right here. Yes. Okay, so the big box is the 120 range supply zone. The larger, the smaller box is the smaller 24 range supply zone. This is the lower time frame chart or lower base chart on which you take your trade. Well, I take my trade from the 24 range chart. You can choose whatever charts you want to trade with. You have to find your own little edge or niche, and in reference to what charts work best for you. But I use the 120 and 24 range. Okay, so when the market comes back to the higher base zone, we're looking at that point again. We figured out. Looking at the direction of the market, breaking structure lower. We have a supply zone, aggressive selling, resting above us. All right, I'll mark that up. High probability with the gap attached to it. All right, step 2. Step 3, find the zone on the inside of the higher base zone, meaning find the lower base zone on the inside of the higher base zone to give you that additional layer of confluence. Right here, you can see there's a gap on this candle right here. All right, back at the zone. Market comes back up there. It taps right here the first time, the higher base zone. There's nothing there. Comes back up, does it again. There's nothing there. But eventually it does come up and touch that zone on the inside right here around, I think like 11:10, 11:15 time frame. Reacts at it, okay? So at that point, I'm interested in going short, all right? Stop loss is going to, and if you see what it did right here after it tapped the zone, I'm going to show you. Remember I just told you they love to tap zones. It reacted up in this area here. So let's say you got into the trade aggressively here at 649, right? Or maybe you waited for the break and close and got in here at 644. Okay, so let's say you got in here at 644. It comes on down 637. All right, maybe aiming to fill some gaps or take out some area of liquidity below. All right, comes down to 637, and then it comes back up here. Look what it did. Remember what I said? Putting your stop loss at the area point of rejection where they react at. So your stop will go at 655. Give yourself a few points breathing room. I would give at least like 2 or 3 points there. If you give yourself some breathing room on the back end here, all right, a few points right there, then they never come back and stop you out. They love to come back because they know people are selling right here. So they're looking to take out sellers that took the trade to go short right here. They come back, stop you out, and then they continue the market going, pushing lower. All right, so give yourself some breathing room at the back end of your stop. Or if it comes down, you're in a trade, you're up 5, 6, 7 points, and then it comes back to break even. Like first candle to the upside closes, maybe the second candle, get out the trade to break even, okay? And then wait to see what happens, something like this, and then maybe enter for a second trade. But again, you've got to give yourself, just be comfortable and be committed to the actual trade, all right? But the number one thing is when you place in your stop to know that they can definitely test the back in here at 655. So again, it goes up there. Maybe it stops you out because you had your stop tick at the back end of that stop, and then it turns back around. A lot of people get frustrated right here because then it moves in your direction. And when it moves in your direction, we're talking about back up here to 655, 656 area, all the way down here to 605 right there. Okay. All right. So 656, 6. So pretty much it's going down to 50 points. Trying to get 20, 25 points of that, you could have definitely done so. Or picked up 10, 12 points of it right there and just waited for another setup. Once you get the one and done and you're profitable on that day, sorry guys, hit my mic, then go ahead and close shop, all right? If you won, so you got 10 points and you want to pick up another 12, 15 points, then look for another setup. But I wouldn't force the hand and be looking to take more than 2 trades a day. Just want to share this with you guys, 3-step scalping strategy, just showing you how you can do it on a daily basis, trading the NASDAQ futures, the ES, whatever market is or contract you like to trade, okay? But outside of that, that's all I have for you guys. I appreciate you tuning in and watching the video content. If you're new, you're new to the channel, okay, or you're a beginner for the first time watching one of the videos here, take the time. Click the subscribe button right now. Become part of the team. Also, make sure to turn your post notifications on by clicking the bell once you click on the subscribe button to make sure you do not miss out in any of the video content. Anyone is interested in joining the Discord, the link is down in the description. It is free to join. If you want, like I said, more understanding, the types of trades to take, the strategy in general, in reference to trades that I've taken and breaking down those trades, because that's what you get. The trade breakdowns, the video playlist, and a great video that I covered on market structure. You can join and become an elite channel member. For all those that are already, signed up or part of that community, that private community, I definitely appreciate it. Yes, it is a private community with tons of video content to where I discuss trade breakdown so you can understand them and possibly take the same type of setups once you understand. But please do yourself the biggest favor and back test the strategy, okay? Multi-chart confluence, higher base zone, lower base zone on the inside, okay? If you're interested in becoming an elite channel supporter, the link is down below. Once you click on that link, make sure to choose the second tier for $6.99 a month, and that's going to give you direct access to that video content, okay? Outside of that, that's all I have, guys. If you do me the biggest favor and click that like button, I greatly appreciate it. I'll see everyone in the next one, and I wish and hope everyone to have a successful trading week ahead.